As you could probably tell from my lip syncing earlier, I was saying welcome to you guys. Hello and welcome. I've now unmuted and you can hear me beautifully well. My name is Martin Jones and I am here from the London School of Business and Finance, LSBF. As you can see from the branding over my shoulder, this is LSBF TV and I am presenting to you on accounting. This is accounting level 3 and the particular paper that I'm addressing for the next 20 minutes or so is called Advanced Bookkeeping. And just saying this out loud in case you're involved in level 2, I was just next door in level 2 studio doing the two basic bookkeeping tasks. That's the word I'm looking for. Doing the two basic bookkeeping tasks, and to be honest with you, pretty challenging they are as well. And I'm rather glad to be here with you now doing the more advanced stuff, because strangely the more advanced stuff is easier. It kind of makes more sense. The higher you go up financial reporting, the more it kind of makes sense. I'm not sure that's entirely true, but there is an awful lot of truth in that. So that's enough of an introduction for me. My name is Martin Jones. We are the LSBF and we're here to present on AAT. And as promised, here is advanced bookkeeping over my shoulder. And you can see I've got the right time there. So it is indeed 3 o'clock, 2 minutes past 3 o'clock. And between 3 and 3:30, for 25 minutes, I'm going to be doing this exercise here, which is actually task 2 on the AAT website. Now, if you haven't gone to your, gosh, I keep hitting my fingers though, it's painful. If you haven't gone to your My LSBF yet, I recommend you do. On your My LSBF, in your My LSBF account, you will find past papers for you to practice. And this question here is taken from the 2016 examination, a real examination. And in that real examination, the examiner asked us to do various accounting tasks, and then asked us to record those accounting tasks, giving the reference to bookkeeping. Advanced, as in you're doing proper accounting, and bookkeeping, as in you're doing the bookkeeping for the proper accounting. It's depreciation, you see. You might have been just reading over my shoulder while I was talking, and you can see there's depreciation here. So depreciation is proper accounting. It's not rocket science, but dividing this number by another number to give you depreciation is real accounting. But then the double entry to record that real accounting, that is of course bookkeeping. And if I just scroll down, you'll see, no, that's not working, come over here. Maybe I need to use the pen. If I just scroll down, that's not working. Okay, that's a bit strange. Just give me a second. That seems not to be working, so I'm going to do this. Just give me a second. Yeah, I don't know what happened there. For some reason the requirement disappeared. Now I'll just do that little thing again where I waggle over my shoulder. So as you can see, we are going to be doing depreciation. Maybe you can't see that yet, but I will show it to you in a moment. We're going to do depreciation, and then this thing's fallen asleep again. There we go. And then we are going to record the double entry on these T accounts over here. You can see there's the T accounts. Okay. So that's what we're going to do. Bit of double entry. Now you might have, I don't know if you can see this, but you might have noticed that the sentences are chopped on the far right over there, and that's because the presentation is on landscape. It's quite nice, it's on landscape, so I'll just go landscape so that you can cope with this, and then we'll get started. It does make the writing a little bit smaller, but hopefully you can cope with this. Hopefully I can cope with this. So off we go with Advanced Bookkeeping, AVBK. Task number 4, taken from the 2016 examination. Examinations are going to repeat over and over again, so 2018, 2019, you will have an exercise that looks like this, very like this. This task is about ledger accounting for non-current assets. You are working on the accounting records of a business for the year ended 31st of March 2007. VAT can be ignored, thank goodness, that was what was the challenge next door, VAT. A new vehicle has been acquired. It is estimated it will be used for 4 years. The cost was 12480, and this was paid from the bank. This was paid from the bank. That's a very nice little bit of help regarding our double entry that we're going to do down there. I am feeling that is a little bit small, so I'm just going to go a bit bigger and move across. Yes, I still have the 4. What I want is just some fairly minimal information, which is the 1248 and the 4 years. And where shall I bring that together? Where do you think? Up there? Just up there? I'm just going to bring that information together. Seem to be fond of red today, so that goes on the top. Just let me change the pressure sensitivity. I tend to press quite hard. It can cause problems with the pen. There we go. So there we go. So we've got UK pounds 12448. I left enough space there. And just let me do that again, because there's something I haven't shown you as yet. What shall I do here? I'm just going to, make myself a little bit tighter. So 12448, and I'm going to divide it by 4 years. Well, in fact, that is the classic depreciation that applies to most assets, because most assets, you use them to death, frankly, and when they're knackered, you throw them away. So I'm looking into a camera now. This camera is actually quite old. It's a big, solid bit of kit from a few years ago, and if you can tell from the quality of the image, the quality of the image is quite good. But this camera is already pretty old, to be honest with you. And although it cost quite a bit when it was bought, I don't know how long ago, a while back, maybe 6, 8, 10 years ago. I'm going to go for 8 years. When it was bought 8 years ago, it cost what it cost, but it was predictable then that it would be used until it was knackered and it would be thrown away. This thing, although it's working okay, it is, it's working okay, so it might be worth something, but its scrap value is going to be near zero. So most assets, all you do is just take the cost and divide by the life, and that gives you the depreciation. That's true for most assets. But some assets, they have a fairly substantial, what's that called? Scrap value, or indeed residual value. And the asset that we're talking about here is a new vehicle, which is a car. And it's quite common with cars, especially if you only use it for 4 years, that the car will have quite a high residual value. And that's what I'm headed for here. It's residual value, and my apologies, I'm going to have to go over here, is expected to be 4,000. I'm going to highlight that in yellow and bring that together. So 4,000. So the cost of using this car over 4 years is not 12,448. The cost of the car is 12,448, but the cost of using it is less, because we're going to pay 12,448 and then get back 4,000, and therefore the actual cost over the 4 years is 12,448 minus 4,000. In other words, 8,448, and that gives us a figure of, we can do it in our heads, can't we? But I'm feeling frankly a bit nervous, because it's always scary being in the studio. So 8,448 divided by 4 is equal to 2112 per annum, I guess, in depreciation. Let's just make a connection between those and those. There we go. So that made a nice connection there between that information. And I'll just go back to the full scale so you can really see that. So there we go. And this is the accounting that is required before we can get into the big job, which is the double entry to record the accounting. So let me just read through the accounting, make sure I have covered all the angles, and indeed that I'm fully equipped to give you the double entry. You're working on the accounting records of a business for the year end of the current year. VAT can be ignored, great. A new vehicle has been acquired. Being a vehicle, it's got a high scrap value. It's estimated to be used for 4 years, but at the end of 4 years, it's still worth something. You know, a lot less than what it cost, but it's still worth something. The cost was 12,448, and that flows out the bank. This was paid from the bank. But even when we pay the 12,448, it's predictable that 4 grand will come back in again. The business plan is to sell the vehicle after 4 years when its residual value is expected to be 4. That's a guess, but we can guess what the vehicle will be sold for in 4 years' time by looking now at what 4-year-old vehicles are selling for. And you know, when you're trying to get residual value information, the most obvious place to go to is eBay, and you can use eBay here to do that estimation, because cars are sold on eBay. I've looked at cars on eBay myself, and therefore eBay would work. But you know, you might be thinking of, you know, another website. For example, here in the UK, we've got Auto Trader and so on. So we get that information of 4. That means we can predict 4 will come back in, 12 goes out. So the total cost over 4 years is 8,448. We divide that by 4 years. So we get 4 chunks of 2,112. And we're doing the first year. So only the first chunk of depreciation is us. Vehicles are depreciated on a straight line basis. A full year's depreciation is applied in the year of acquisition. Depreciation has already been entered into the accounting records for existing vehicles. So we don't need to worry about the double entry for any other vehicle, or indeed any other property, plant and equipment. We only need to do the depreciation for this fellow. And I'm just going to concentrate on the double entry here. Make the entries in the accounts below for the acquisition of the new vehicle, the depreciation charge on the vehicle. On each account, show clearly the balance to be carried down or transferred to the statement of profit or loss as appropriate. It's a very important point, that, and that's going to be my main focus, making sure I do the T accounts. I'm not going to worry too much about anything else. So the balance brought down of 46,300 in the vehicles at cost includes all the other vehicles. I now have the purchase of a new vehicle, which, as it said up there, was purchased by being paid for from the bank. That's nice English, from the bank. There we go, so reference the bank. So there'll be a credit to the bank and therefore a debit to the vehicle at cost fella here. And the bank is not shown here, so we get a kind of single. As you can see, there are 3 T accounts that we're required to address: the vehicles at cost, the depreciation charges, and the vehicle's accumulated depreciation. So there is an entry in the bank. It's credit to the bank, and therefore debit to the vehicles at cost. And I'm going to go for blue to make this stand out. And it's often called folio referencing. Just notice my shoulders being chopped off there. It's a little bit small, isn't it? So, oops, I've gone the wrong way. I'll plus it up and move across. Yeah, there we go. So just let me move this across, because I've just noticed that my shoulders are being chopped. Means a bit awkward with the mouse, but never mind. So folio referencing is the idea that when you're in the I'm conscious of the fact you're seeing the double entry the opposite way around to the way I'm seeing it when I've got my hands in front of me. So when you are, gosh, that's hard to do the opposite way around. When you are doing credit to the bank, you reference the vehicle's T account, and when you are doing debit to the vehicle's T account, you reference the bank. So you reference the other T account. That's a basic idea in bookkeeping, referencing the other T account. So by putting in 12448, it's fairly obvious what I'm communicating. I'm saying, you know, we got a new vehicle with a cost of 12,448. That's fairly obvious what the number is saying. But what this reference on the left hand side is saying is if you want to see the other side of the double entry, go and look in the bank T account. And that's just the purchase, and obviously I now need the double entry. And you know this, do you know what I think I'll do? I'll actually close this out and bring it down. So the vehicles at cost just records the vehicles at cost, and that is the vehicles at cost, so we're finished. So what I will do is I will close this out now, and I will carry down a balance using the language from above. Balance carried down. Balance carried down. So I will select from the drop down menu balance carried down, and there's so much going on in these studios that's really important for me to be reinforced. So I've got a cheat sheet here just to make sure, you know, I'm not making any arithmetic mistakes while I'm thinking about the air conditioning and the lighting and everything else. 46300 plus 12448 equals 58748. So 58748 and 58748. Now what we're not required to do is to bring down the balance in the new year, but the balance brought down in the new year is exactly equal to, but on the opposite side, to the balance carried down. So to balance the T account, I've got 58748, and then I'll be a bit naughty. It's not required by the examination, sorry, I'm not looking at the camera. It's not required by the examination, but to help me communicate, I will just make a note of the fact that in real life, for every balance carried down, there is a balance brought down. So the balance brought down is 58748, and it's the equivalent of this balance here. Of course, the balance brought down at the end of the year is the balance brought down is at the beginning of the year plus the purchase. And as you can see, it's a debit balance. It's on the left hand side. Well, that's interesting. I've just noticed that. Of course, the question is missing the double entry. So you drive on the left and you crash on the right. That's an important point as well. You drive on the left and you crash on the right. Oh, really nice. Okay, just give me a second. What on earth's going on there? Why can I not do that? Oh, here we go. Good. Excellent. Guys, I was just making sure that my framing is okay and I'm not chopping anything off, and you can see me clearly. You can see my drive on the left and my crash on the right. You can see it really clearly. And as I was just checking my framing, I noticed Stuart has joined me and Chryson has joined me. Welcome, Stuart. Welcome, Chryson. I hope you find this useful. Carrying on. So this debit balance of 58748 is the carrying value as at the beginning of the year, and we want this. I just chopped my hand off there. We want this carrying value of 58. We want this carrying value of 12448 to go down to 4 over the 4 years. So we want the 12448 in the 58748. We want that balance to go down, the carrying value to go down. But the carrying value is the sum of two balances. The carrying value is the sum of the accumulated cost less the accumulated depreciation. So what I want to do is I want to make the accumulated depreciation accommodate the fall in value of the carrying value of the asset over the year due to its use. Gosh, that's a complicated sentence. Because the asset has been used for a year, I want to recognize the fall in value for the use for the year. So the fall in the 58748 needs to be on the opposite side. So here we go. Let's see if we can do my reversing here. Oh, there we go. Yes, indeed. I'm looking at the right monitor now. This debit balance needs to be reduced with a credit balance. So the accumulated depreciation needs a credit balance. Yeah, I've got two monitors over here. That's what's distracting me. So the accumulated depreciation, we've got some depreciation already charged, and we want some more for the current depreciation on the newly purchased vehicle. So we want 2112. Oh, this one's going to be really nice with the folio referencing. And of course, if we are, let's put that in. Drive on the left, crash on the right. Only works in the UK, that little mnemonic. We drive on the left, we crash on the right. The other side that I want is the charge in the P&L. And the charge in the P&L is a cost. So do you know what I want to do? I want to get rid of that balance brought down now, if you'll allow me, because that is not part of the requirement. So just let me use my, what's going on there? Yeah, there we go. There's a function called delete strokes that I want. So here we go with the drive on the left, crash on the right. If I maybe change the scale even more, makes it a little bit small, admittedly, but it's very helpful for communicating what I want to say, which is because that balance over there is on the credit side, I want this balance over here to be on the debit side. So that's 2112. And now I can do really nice folio referencing. So in the depreciation charges T account, I reference the accumulated depreciation. So let's do that now. I'll have to make it bigger in order to execute this. There we go. So vehicles accumulated depreciation. Just takes a lot of writing, doesn't it? They're big words, aren't they? And then on the other side, we've got vehicle depreciation. Depreciation charges, my apologies. Depreciation charges. And now I carry this one down with 17262. I carry this one down with 17262. So it is balance carried down of 17262. Great. And the other one I clear to the P&L. Of course, depreciation charges is a charges, so needs clearing to the P&L T account. So this one has no carry down. So add down and clear to the P&L report. 9687. 9687, and therefore I charge this to the P&L. Let's get the exact phrase that we're using for the P&L. Is it the abbreviation profit or loss account? So I'll put it up here, profit or loss account. Oops, run out of space. And that's 9 9,687. Woof! And that balance of 9,687 will have a corresponding debit balance in the P&L account, and that debit balance represents the cost. And that's how the double entry is achieved. If I may now go big head, I can summarize what I've said. Thank you for your patience in listening to me in recording the double entry for depreciation. We learned just now how to do depreciation, but also how to record it. In fact, we recorded cost as well. I hope you found that useful. And my name is Martin Jones, just to reinforce what I've done with you. Let me get the title up in front of me so I say this exactly right. This is Level 3 Advanced Bookkeeping. Advanced as in it includes accounting, and bookkeeping as in it is double entry. I sincerely hope you found this useful, and I am going to wish you good luck with your studies and close out now. See you soon.